Good morning. We're just going to give it another 30 seconds. People are kind of trickling into the room here, so we'll just hold on for a minute. Okay, we're going to go ahead and kick off. So, by way of introduction, I think everyone on the call should know me, but I'm Justin Ferraccio. I'm one of the managing partners here at Seven Bridge, and this is Chuck Eberly,
Hey, good morning, everybody.
the
Glad you're
founding
here.
partner of Seven Bridge. So he's still more important, but
Not
getting
real,
closer.
not really.
Chuck and I both decided to try to match the wall today, so you might not be able to pick us out, but we're here. This webinar kind of started, it was an idea from a client. We were to get it by way of monthly update. They talked about us writing, a memo or a newsletter, and we thought this would be a more active, more personalized way to connect with you all. So we do this webinar monthly. We talk about a range of different topics, usually market update, economic update, talk about what we see happening with the elections when things were happening there. We do bring in guest speakers multiple times per year. So today we have guest speakers, which I'll introduce a little bit deeper here in a second, but we have CCIG, Andrew and Andy. So we'll go there in a minute. If you do have questions during this webinar, please type them directly into the chat. They come through as anonymous, so no one else will see them except for me and Chuck and the other boys here on the call. And we'll do our best to answer all the questions. If we don't get to them or if they're too personalized, we'll reach out to you directly. So from here, I'm going to share my screen just for a quick second, and then we'll pass the meeting over. Hard to believe it's already July. Years flying by. So, again, we already did the introduction. We'll briefly touch on market performance, and then we're going to talk about the state of property and casualty insurance markets with our guest host here from CCIG, and then we'll dive into questions. So, not a lot has changed over the last month. The markets continue to improve. The Dow is now up 4.5% in the year. S&P is up 6.5%. NASDAQ, which is more tech focused, is up close to 7%. Small and mid cap, which is the Russell 2000, still kind of lagging a little bit in this market. It's up close to 1% for the year. Equal weight S&P, which takes all 503 stocks in the S&P 500 and weights them the same, it's up close to 5% for the year. And then the bond market is continuing to, do better slowly, but it's up 1.2% now for the year. So again, I think it's, important. There's been a huge change over the last 3 or 4 months. I think 3 or 4 months ago, we had this meeting and we talked about the markets being down close to 6% or 8% or 10%. And now we're up, 6, 7% for the year. So the strategy, I've continued to work on our side. We were down much less when things were tough. We're keeping up close to the S&P returns right now. We're comfortable with the strategy, comfortable with our sector weightings, which we talked a lot about last month. So I just wanted to give a quick update here. And next meeting, we'll talk more about what we see happening in the economy, where we see the stock market headed through the next 6 months. So from here, I'm going to turn my screen share off. And I'm going to introduce these guys from CCIG. So we have Andrew Ream, who is a close personal friend of mine, as well as a business friend of mine, and then Andy Orlando. So both from CCIG, they do a range of different things. But what Chuck and I have talked about a lot recently, we get a lot of questions about the state and the insurance market. And Chuck and I have these same questions when we're looking at our own situations. It used to be more simple. You used to just get your insurance bill, property, casualty, homeowners, pay it. It didn't change too much year over year. Now, when you open your new statement, your renewal for the next year, we're seeing 20, 30, 40% increases. So part of the value add that we want to have here at Seven Bridge is we help with the investments, we help with the decision making, the planning. We also feel it's important to help, with decisions like this, right? When we're looking at insurance, how does it work? How can we get ahead of it? What does the future look like? So, as kind of your advisors, we're looking at this as something else we can add value and kind of give some opinions and bring in some experts. And we've met with multiple firms. We think these guys are best in breed. So I'm excited to hear what they have to say. Anything to add?
No, I just say that, property casualty insurance used to be you get your bill, it renew about the same rate. But it's now something you have to pay attention to. You need to look at how your policies are constructed, what your deductibles are, and really who you use for property and casualty is almost like an advisor now instead of, like a vendor. You really need an advisor in this space. And this is something that we want to help you with personally, but also through our relationships, help you find a good solution because now it really moves the needle on your budget like never before.
So we'll hand it over to Andrew. You guys can kick off.
Well, thank you, Justin. Thanks, Chuck, for having us. It's an honor to be here. It's as Justin mentioned, he and I are personal friends, and we became fast friends. And after I'm a recovering CPA, and then after a long stint in family business, we kind of turned this into more of a professional relationship where, it was really kind of focused on client education and turning your clientele and your network into informed buyers. And it's you want to teach them to ask the right questions and not kind of put everything in your corner but be advocates for themselves. And so just a little quick background about CCIG. We're a commercial insurance brokerage located down here in the tech center. We were started in the 80s by our founder, Brooke Mahoney, and he's still active in the business today, but the day-to-day operations are being run by his two sons. And as at the top line there, we're fiercely independent in a kind of environment where a lot of folks are cashing in and selling their firms, and you see a lot of acquisitions. We're staying independent, and that's how we're going to grow. And we've got presences in Phoenix and Austin, have clients in all 50 states, and we're really good at what we do. And those three things are kind of, I call them the three legs of the stool. We do property and casualty, so that's on the commercial side. So anything that you can think of when running a business, the fun stuff that people really love doing, property, casualty, general liability, employer liability, workers' comp, all that stuff. And then kind of with that also on the commercial side is the employee benefits practice. So our sweet spot is probably companies that are anywhere between 50 and 2,000 to 3,000, which seems like a wide range, and it is, but that's kind of where we service it best, and we will walk people through their health benefit plans and how to take advantages of just opportunities in the marketplace and programs and things like that out there. And then the third leg of the stool, which is probably the most relevant when he talked to me about having us come on here, is our private client group. So we'll refer to it as PCG. And this is the third and final leg. And we do just a ton of work with high net worth individuals and family offices, and just folks that kind of have more complicated insurance needs than those that want to spend 15 minutes and save 15% kind of a mindset. And I'll let kind of Andy dive into his personal background, his professional background, but he's been on the carrier side. He's been a broker here for several years. He's a partner in the firm. He's got his finger on the pulse of the marketplace, and kind of what Justin and Chuck were talking about earlier, about just the craziness that is the insurance market. We see fires everywhere, and increases, and you really want an advisor and an advocate to walk you through this stuff. And that's kind of what Andy and his team focus on. So I can kind of let him speak to his background and take it from here.
Yeah, thank you. Thanks, Chuck, Justin, Andrew. I've been in the business 20 years now, 12 of those years as an executive on the carrier side with Chubb. So one of the things when I joined CCIG 5 years ago that I really wanted to focus on was to everyone's point, really focusing on educating our families, helping families make educated decisions, well-informed decisions whether that means we earn their business or not. And you know that, just like Justin and Chuck, we work for free plenty of times, and we do so with a smile on our face, and we're happy to do so. And really, more importantly, we just want to do the right thing and you know, help inform folks what is going on in the market. How should we be approaching and thinking about the insurance space, and more specifically their insurance program. So, you know, hopefully there's, you know, a couple things that everybody can take away from our conversation today. I want to be very mindful of time, so I may cruise through anything, and I do have the chat box open. So if there are any questions that come up, feel free to throw those in. I'm gonna fly as quickly as we can here, just to cover the primary topics. As Justin and Chuck mentioned, you know, there's been a lot of disruption in the insurance space, and you know, it's not as simple as just renewing your policies and moving on anymore. It really is a space where people are seeing 20, 30, 40, 50%. I've seen families in California, and you know, we're here in Denver, here in Colorado, in the mountain towns, see 400, 500% premium increases. I know that sounds insane. It's a reality. And really, there's a few factors driving that, and just kind of starting at the top. These are just some news headlines that I grabbed that are snippets over the past few years of, you know, just disruption in the insurance industry, and carriers, essentially insurance carriers, are losing money. You know, over the past 3 years, insurance carriers wiped out well over 30 years of profits. And so it's left carriers reeling to reassess their business, re-underwrite, understand, okay, how can we remain in this business and still remain sustainable? And that's where we are today. And there's a lot more factors underlying that. But what is driving that? Why is this happening? Primarily, there's a handful of things. It does start with, we are seeing an increase in catastrophic events. All of these, wind, hail, wildfire, hurricanes. Right now, we have a flooding events, obviously last week or 2 weeks ago in Texas, which are terrible, terrible stories. And then right now in the Northeast, that we have New York City subways underwater. And you know, so we are seeing an increase in frequency of events, and on top of that, the severity from a dollar amount standpoint has increased. Obviously, these are pictures. This is a hailstorm. Justin, you may remember this hailstorm in Golden, I think in 2015, 2016, a few years back. This is just an old industry picture of a secondary mountain community. Oop, I'm having chat. There we go. Mountain home that obviously left their water on, and this is Malibu last year, a few months back in California. So we are seeing devastating catastrophic events. This is specific or highlighting an event from a few years ago in Colorado of the Marshall Fire, where 500, 600 properties burnt. The point of this example really is highlighting how many of these properties were grossly underinsured. And this is the most common thing that we see. Most of our clients come from, you know, by inertia, traditional insurance carriers, State Farm, Allstate, American Family, Farmers, who, by the way, are fine insurance carriers. But once you exceed a property value of $1 million, you really start to outgrow those carriers. And you know, I've seen families with properties that would cost $5-6 million to rebuild, insured for $2 million, $1.5-2 million with these carriers. And that is the most common gap in insurance or coverage deficiency that we see, is that properties are not insured to the true value of what it would cost to rebuild in today's market.
And that, if I can interject, that the tough part of that is that when you're an advisor, you're having these difficult conversations with your clients, asking them to reevaluate their insurance program, that in many times might lead to higher premium. But I guess the risk is that you're underinsured and something does happen. It's ultimately it's the client's decision, but it's our job to inform you.
Exactly. Yeah. And you know, I tend to err on the side of caution, and I like certainties in insurance. So insurance surprises are not good ones, right? And the way we approach it is insurance policies are legal documents. They're legal contracts, right? And so the majority of the policies that we place with carriers like Chubb and Pure that specialize in multi-million-dollar properties, they're what's called a guaranteed replacement coverage form, which means if your property is insured for $3 million, God forbid it burns down and it costs 5 million, 6 million to redesign, right? Architect, engineering, pull permits, interior design fees, and then of course profit and overhead for the contractors. If it costs $5-6 million, they're going to pay the full $5 or $6 million. So that certainty of, I know that we have coverage regardless of what it may cost. It doesn't necessarily mean that those carriers are going to cost more money to insure. And I'll share an example if we have time at the end of a scenario where the premium actually comes down, which is pretty common. Just to cruise through this slide, obviously we can see an uptick in the billion-dollar catastrophic events since 1990. Of course, inflation has a component built in here, but there's a clear trend line upwards as far as frequency of catastrophic events. And frankly, they're not just out west. They're not just in the southeast. They're in the center of the country. Hailstorms, we call them non-modeled catastrophic events. You cannot predict, you cannot see them. You know that they're going to happen at some point somewhere, but they're less traditional catastrophic events that we're seeing more frequently. I'm going to skip over reinsurance. This is really the underlying cause. Actually, I do want to touch briefly. This is really where Justin and Chuck's world, the financial world and our world intersect. This is capital being injected into the insurance space so that insurance carriers can pay claims. This is insurance policies for insurance carriers. And because there is a lack of capital, higher interest rates, there's more interesting investments out there, like you name it, the things that Chuck and Justin are advising you all on, than an reinsurance fund. And so we're seeing money flee the reinsurance market, which is causing premiums specifically in catastrophic exposed areas, California, Florida, Colorado, anywhere where the catastrophic event could happen. Those are the areas that are getting hit the hardest in this insurance marketplace right now. Carriers are responding with an increase or tightening of underwriting guidelines. That is very widespread. They're requiring higher deductibles, wind, hail, wildfire, hurricane deductibles, sometimes 10%, 25% even, restriction of appetite, and increasing of premiums, along with some of the other in notes on the bottom, hardening of homes, which really reduces risk, is sort of the next evolution of where this goes. They're going to expect it will be the table stakes in order to secure good insurance in these areas that homeowners invest in their property to help avoid losses, which certainly will be rewarded, but in certain areas it's the expectation now in order to secure coverage. I'm going to breeze over this slide, but water losses, pipe bursts, make up almost 50% of home claims, and they are easily avoidable. This is a device. There's many of them out there. We recommend this to all homeowners. I have one. About 40% of my clients, if not more, have these. They can detect a pinhole leak anywhere in your house through water flow and pressure in your piping system and notify you on your phone that, hey, your toilet might be leaking. This device is only $500. Another $300-400 to install, $1,000. More complex properties, the price obviously is going to be a little bit more expensive, but we highly recommend these, and the credit on the homeowner's insurance policy typically pays for itself within a couple of years. Another device, electrical arc fault sensor. It monitors your electrical current throughout your house. Really cool device. I'm not an electrician. I'm just an insurance guy. Apparently, this is what an electrical arc fault looks like. And obviously, we know what the end game is if we have one. And so this is an inexpensive device. I think it's like $100, and you just plug it into any outlet in your property. So to my point earlier, the majority of affluent, call it high net worth families are insured just by inertia. They had a college friend that was with a standard carrier, and 20, 30 years later, they still are with that same carrier, and they've far outgrown it. And so I like to say we're overpaying to be underinsured. And so these are the carriers that we primarily partner with. These are the carriers that really specialize in this space, multi-million-dollar properties, families with more unique, complex assets, needs all over the country, all over the world.
To Andy's point as well, so when you're going with one of these standard carriers, you're only able to buy their products. You go through their underwriting. The nice thing about an independent broker like CCIG is that we've got the whole network of carriers that we can go and market your policies and your needs to. And you're going to find once you kind of get some competition, because these folks are educated buyers too, and they want good risks. And it's our job to sell them your risk, if that makes sense. And it's the strangest business I've ever seen, but they're looking for reasons not to write your policies. They really, truly are. And it's our job to paint a picture that makes it, more palatable for them to take on your policies.
Yeah, that can't be overstated. Who you hire to represent with these carriers is important, because I've had accounts, I've seen accounts many times on both sides of the business presented by one agent differently than they were by another, and you get two different decisions. And once a decline is made on an account by an underwriter, they're human, and it's very difficult to overturn a decline for another agent. So how something is presented to an underwriter is important. Just understanding how they think, what do you need to whisper in their ear to if it's a borderline exposure. Where are families most underinsured? This is a survey, independent agents like ourselves. What jumps out at me is that liability makes up 5 out of these 9 topics, right? And so that is a really big component of our advisory conversations with our families. And so for the lawyers in the room, joint and several liability essentially means, and this is a countrywide legal term, essentially, if you're held 1% at fault, you can be held responsible for 100% of the damages. Bear with me for the, I don't know what's going on here. There we go. That's interesting. I did not. Okay. Anyway, Colorado is a relatively fair state that says, hey, if you're held responsible for 50%, you can be held responsible for 50% of the losses. But in other states, if you're found responsible 1%, you can be held liable for 100%. This is a real life scenario that happened. 4 kids, this was about 10 years ago. This happens. 4 kids were in a car, joyride. One gets on the hood of the car, and the driver drives away. Kid falls off the hood of the car, suffers severe brain damage, needs medical assistance the rest of his life. Who's at fault? Well, a lot of times I'll get the answer, the car owner, the driver of the car, the kid who got on the hood of the car. I agree. They're all idiots for that scenario. Who got sued? The kid in the backseat's father, who was a very well-known, well-successful businessman in the community, and he was sued for well over $20 million. He had an umbrella policy for $10 million, and he came out of pocket well over $10 million. So these are scenarios where just being successful in our society, it's very litigious, and it makes us a target. Many other scenarios, really rare, guys. I have seen crazy scenarios in my career, highest settlements. You're never going to use or need your umbrella policy, frankly, and I say that knock on wood. But God forbid, it is nice. It's that sleep at night insurance. We want to make sure that we're
And the cost as well is not prohibitive. So we don't mean to scare you, but you can get a lot of coverage on top of your existing policy for really not that much premium.
Yeah, it's so inexpensive. And just from a reference standpoint, as far as like what's the right umbrella, that's one of the most common questions that I'll get. And frankly, I can't give you a perfect equation. If I did, this would be it, kind of. But it really is a risk tolerance conversation of what can you sleep at night with? Total net worth is a good reference point. right? I have clients worth 50 million that carry 50. I have clients worth 50 million that carry 10 or 20. And so really is a risk tolerance and a lifestyle conversation. And we're happy to be a resource for you along with Justin and Chuck and their team to kind of guide you there. A few other components that are common that we run into. I'm going to cruise over this side, but trust and LLCs are very, very critical, along with domestic staff, nonprofit boards of directors, homes under renovation, and many of the other components on here. And missed savings opportunity. This is just purely optimizing your program. And this is sort of just a snapshot of what our analysis look like for clients that come to us. And highlighting again, underinsured on the property, longtime client inertia, 30 years with State Farm. Property would cost well over 11 million to rebuild, was only insured for just under $7 million. Premium actually came down. They didn't have the trust listed on the policy, and many other deficiencies, and frankly, the policy forms read incredibly different. So that, perfect scenario where just optimizing the program. And if I leave you all with one bullet point, one is review your umbrella program, make sure that you're comfortable with that limit, with your umbrella limit. And number two, take higher deductibles. That is the best place to start as far as managing your insurance premium. It is not in your best interest to turn in small claims. And one of the most important roles of a good insurance advisor is advising clients through the claims process, not only when it makes sense to turn in and how to turn in a claim, but when it makes sense to not turn in a claim and keeping those small claims off of a record. We want to reduce the frequency of claims and reserve insurance for catastrophic events that could potentially impact our financial longevity. Anything to add there?
It's just an amazing, we're in a amazing spot because we've got a team of 20 individuals that are on the PCG side that if clients have questions, we are your teammate in this, and we have a direct line into our carrier network and who your personal carrier is. You don't have to wait on the 1-800 numbers for State Farm, American Family, or go directly to their branch where they've got, 3 or 4 people. We've got an entire team of folks that will guide you through this with any questions. And it's, you don't have to learn all this by yourself. You have someone alongside of you that's guiding you and will coach you the entire way through the process.
Yeah, we partner closely with Justin and Chuck, and just make sure that anything that you all are doing with them and their team aligns with your insurance program, right? And walking lockstep with your advisors is important as well. So we are here as a resource. We just want to help folks feel really good about your insurance programs. And Justin, Chuck, is there anything else that we didn't touch on that you think would be good points? I know we're a little bit over, so my apologies for that.
Yeah, I'd say, really appreciate it. The topics you covered, I think it'll give everybody on this call food for thought to look at their own situation. And I'd say, to everybody on the call, as far as what to do now, I'd say, pull out your policies, kind of, look at it. The question I get more than anything is about umbrella policies.
Yeah.
I think virtually everybody on this call should have one. If you don't have one, that's kind of a red flag. What to do, give us a call. We can have a conversation about what you have in place. Justin and I know enough to identify issues, right? We're not experts, but we are experts at, knowing your situation, having a discussion with you. If it's appropriate, we'll introduce you, to Andy and Andrew. And, kind of our relationship with them is they're here to help you and help us. Many times it doesn't lead to business for them. Sometimes it does, but that's not the purpose. It's to get you comfortable and confident that your risk due to your lifestyle is appropriately covered with an appropriate premium level. Get it just right. And then, not just set it and forget it, but it's a dynamic situation that needs to be looked at, not every day, but certainly, once a year, peek at it. and make sure you're sufficiently covered and you're not overpaying.
You nailed it, Chuck. And we are here as an extension of the Seven Bridge team. And plenty of times we'll just give bullet point feedback. Hey, stick with State Farm, increase coverage, look at higher deductibles, look at your umbrella. To your point on the umbrella, Chuck, I just want to add one of the bigger conversations that we're having more recently is on uninsured motorists. There is an increase in uninsured motorist claims across the country. I actually had a daughter of a client that was hit by a head-on driver and killed. And one of our carriers, Pure, paid over $2 million. But that is a very important coverage, very inexpensive on the umbrella policy, having excess uninsured motorist coverage. We pay all this money to protect ourselves from what we might do to other people, but more importantly, or just as important, what other people might do to us. And we are seeing an increase in uninsured motorist claims, automobile accidents. So again, there's a lot of topics to cover, and really, really appreciate the conversation and focus on the insurance space.
No, just to quickly kind of reiterate what Chuck was saying and also Andy, is that, they didn't bring us in, or Chuck and Justin did not bring us in for a sales pitch. This was more, it's collaborative. If you guys, Justin's has sent me things before, and hey, can you take a quick look at this for a client? Like, part of a relationship and a partnership is that we are helping their clients, and a lot of times it doesn't lead to business. We'll reiterate, it doesn't, that's not the purpose of this. The purpose is to educate you all and to sometimes validate the decisions or the coverages that you already have. And there's so much value in praising your competition or praising something that somebody already has done because they're doing the right things. And this isn't a sales pitch by any means. It's to educate you all.
Perfect. We appreciate you. We did get a question about the presentation, so we'll work with CCIG to see if we can get a copy of this, and then this whole webinar will be available. It's recorded, so we'll sort that out.
Awesome.
Thank you so much for being here. We appreciate it, and everyone that joined the call, thanks for spending 30 minutes with us. We look forward to doing it again in August, and anything pops up in the meantime, reach out to Chuck or myself directly, and we'll have a conversation.
Good deal.
Thank you all.
Thanks, everybody. Thanks,
Appreciate
Andrew.
it.
Thank you.
See you guys. Thanks, Andrew.
Be good.